Morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Thursday. Our toll-free number, 800-951-0592. The website at allamericangold.com. And yes, we are making progress in our social media pages, wherever you may be, all you podcasters, terrestrial radio, the guys that listen on your phone. Maybe you stream in 1360khnc.com, wherever you may be listening. Welcome. I feel like a Kardashian. I got cameras in my face. We've got lighting. I'm told I'm not wearing the right shirt. I mean, pretty soon the girls are probably going to put makeup on my face. I mean, I don't know, but I'll get a hair club sponsor. But Jason, our first part of our YouTube test went really well yesterday. And I think we're on track that before the end of this year, we are going to have video to go with the audio on our YouTube channel, and then we're going to do a lot of fun stuff with it after that.
Yeah, this will be a great addition to what we're doing. Joe and I have been talking about this. I remember it was a couple of months ago, Joe, and you've been working with the guys over there in Arizona, so it's kind of been more your effort on that end. But I did remember telling you we have this channel where you can go on YouTube and actually listen to all these shows that go back years and years and years. You can even go there and hear some of the shows that Eric did years ago. And I told Joe, I was like, the one show that's got the most views is the one that Bucky Dillon filmed you when he was here. And they can see you doing the show, and that's got the most clicks. So I was like, I think, Joe, we figured out that we probably should just get with the program. Right?
Yeah, apparently people want to see an ugly guy. I don't get it, but yeah, that one was, and it's not even close. But now we're working there. Go out there, listen, subscribe now. Get ready. We're going to do giveaways and contests. We're going to have even more content on that channel. So we got a lot of great things coming up there. It is Thursday today, so we did get jobless claims. They're creeping up. This one, 230,000. Not anywhere where I'm getting excited yet, but think about it. We've been that 200, 210, 215, 220 for the last month or so. We've been in that 220, 225 range. Today, 230. But you got to remember, they do all this seasonal stuff. They had the salt, the pepper, the garlic on an unadjusted level. So without the seasonal adjustments, it was the highest number of first-time jobless claims since January. So something to look for here. Not ready to get too excited yet, but as I've warned all of you, the real recession's going to hit when these job losses start escalating. I think, Jason, the bigger number, though, was the continuing claims. So these are people, okay, I lost my job. Maybe I lost it a week ago. I lost it 2 or 3 weeks ago. Being able to find another job quickly, that has slowed pretty dramatically. 1.671 million Americans filing for continuing jobless claim benefits. Jason, that's the biggest number since February. So we kind of got a number today that is making sense. Unadjusted, the highest since January. Continuing claims, the highest since February.
Yeah, and I think as these numbers get higher, Joe, it's reflecting a much more serious problem than I think a normal higher jobless claim. Because what was it just last year, Joe, that nobody could find anyone to hire? Remember that?
Right.
COVID just flushed the job market, and nobody could get good people. Well, I don't know if they ever really did hire people. I just think the rate hikes just sort of even that thing off.
Yeah, so we're going to see how that plays out. BlackRock came out today. We're going to talk about them. They've instituted a hiring freeze. Another major warning, though. Remember, yesterday we had the CEOs of Wells and B of A warn. A lot of analysts have been warning. BlackRock now saying things are going to get a lot worse before they get better. And 401ks, what they call hardship filings. In other words, people that, okay, I've got my 401k, I've been contributing, hey, I've got a money problem, right? I don't have enough money at the end of the month to pay all my bills. Jason, they're tapping these 401ks. This is another major sign, and it's not in a small way. This isn't one of those ones, kind of like jobless claims, where okay, it's a little higher, little higher, little higher. It seems like these 401k hardship filings started skyrocketing. They were a little, August, September, but really in October, a huge increase. Matter of fact, according to Vanguard, and Vanguard, the largest administrator of 401ks in the country, said that hardship filings in October hit an all-time record high. So this is really another indication that the consumer's in trouble. We know credit card debt is already at all-time record high, Jason, and now we're finding out that people hitting their 401ks, which is that's just not where you want to be.
I've never actually had a 401k with the type of jobs that I've had in the past, but don't you have to pay a little penalty or something for pulling into that thing early?
Yeah, so you're going to be, you got to, there's always penalties and things of that. 25,000
You really got to need it to dip into that. You really got to need it, Joe, right? I mean, if you're going to dip into the 401k, you really need it, because who wants to lose the money by dipping in early?
Yeah, and it's not a great thing. You have to have an immediate and heavy financial need, and apparently that immediate need is growing. Patriot Radio News Hour. I'll give you a market update when we get back. Market update brought to you by my friends at Y-Refi. And, think about what we've been talking about, and all of a sudden now the consumer starting to feel the pain, the stock market, the volatility, the huge losses. Now we got to count on Joe Biden to guide us through a recession. I mean, wouldn't it be great if you could invest your money, get super good returns, not have it be tied to Wall Street, have it be guaranteed? Unlike these hardship withdrawals, there's no penalties, there's nothing like that. I encourage you, I'm telling you, this is a great place to put your money, and you do a lot for the greater good. We don't need this huge government. This is just another prime example. They help all of these distressed student loan people out there. They're co-signers as well. You get a great return. Go out to investyrefy.com. That's the word invest, the letter Y, REFY.com, or call them at 888-YREFI24. 888-YREFI24. And tell them that Joe and Jason sent you. I know you're going to be glad that you did that. Gold's up today. Silver's up today. Right now, gold, December gold is $1,790. The February gold, which is the gold you see on TV, this is the gold that gets traded. This is the gold that the analysts track. Right now, it's just above that 200-day moving average. So this will be another catalyst for higher gold prices. Right now, 1802, the 200-day moving average is $1,800.70. If we close above that, another bullish reason for gold. Silver back above 23. That didn't take very long. Up 40 cents, $23.10. The Dow is up 200 points today. The S&P up 23. The Nasdaq's up 100. But Jason, this 10-year note, it just gets creepier every day. Down to one. Hold on, I got to get it. I had the wrong place here. I'll get it. There you go. 345. It's actually been as low as 343 this morning, Jason.
Yeah, you've been really focusing and watching that number, and it's when we talk, you're baffled because you're thinking this is. It goes against economic sense, as that number.
I mean, we're going to raise rates by at least 50 basis points on Wednesday and put us between 4.25% and 4.5%. How can we have a 10-year note yielding 3.4%?
It's got to be something to do with the money floating around behind the scenes. We reported, we even talked about a little bit today, that the BIS and you got money doing things that it's just never done before, and
Yeah.
They don't tell you what they're doing with the money, who's printing it, or how much of it's floating around, Joe. And it's funny when their own barometers for watching this stuff don't show logical information. It shows you that somebody is not saying something, Joe. There's definitely things going on that we have no idea.
There's a major disconnect. And again, there's obviously something in this bond market that they're seeing isn't the report from the BIS with the issues with the currency derivatives. My guess is it's going to be related to derivatives. They've never fixed the problem from the financial crisis. They just papered over it in a very, very big way. And now with rates rising and the economy starting to slow, consumers feeling tapped out, they're starting to raid their 401ks. Again, a lot of signs pointing to that the bond market is right here. And that just means that Wall Street is probably way overpriced, even though it's only, 33,000. And today, BlackRock adds to the mix, saying that a worldwide recession is right around the corner. Central banks boosting borrowing costs to aggressively try to tame inflation. Listen, that's not true. They're not aggressively trying to tame inflation. Now, the TV and the stock traders and the debt traders, they want to tell you it's aggressive. When you admit to inflation of 8% and yet you only raise rates by 1/4 of a point, that's not aggressive. And of course now, Jason, they're going to lower that to 1/2 a point.
And you're right. These indicators of the stock price of these companies, it's you have to kind of read between the lines, anyways. But right now, Joe, a lot of these big companies that are in the S&P or the Dow, they're having layoffs. They're shrinking the companies. I mean, with Walmart has their employees buying their stock all the time, right? So if you're not hiring as many for the holidays, you're actually letting workers go, your stock price isn't going to be going up. It shouldn't be. Without the buybacks, Joe, these stock prices can't be higher. So this is all going to change very quickly. When there's layoffs, Joe has been talking about, there are going to be more and more layoffs. 2023, you're going to start to see a lot of chaos in the job market. They need this so that they can try to control inflation. And Joe, I've been saying it a long time, but I don't think the rate hikes they're doing are even going to be enough. I think we're looking at more and more inflation that's just going to keep roaring. And this is where that digital currency comes in, the big white knight riding on its horse to save the world, right?
Yeah, and I think BlackRock, because you get moments of clarity. Even they had to admit a 4-decade era. They called it a 4-decade era of stable growth. That's what they tried to spin to you. Really what it is, it's a 4-decade, really a 5-decade era of debt and deficit spending. That's really what it was. Now, you want to call that stable growth. I guess you can call that a stable growth if you want, but really all as it's been is a huge expansion of debt. And really, if you think about it, over the last 50 years, our standard of living has been falling along with the growth of this debt. And now this inflation cycle and the heightened instability, they're saying that a new regime of increased unpredictability is here to stay. Policymakers will no longer, and I think this is the key, because this is something Jason and I keep saying. The Fed, they love to come out and tell us, oh, we've got this tool in our toolkit. We've got this tool in our tool belt, and we've got this other tool, and we got that tool. We got lots of tools. It's all the same tool, and it's always throw more debt at it. And according to BlackRock, this time they won't be able to do it. They're not going to be able to support the markets like they have during the previous recessions, because, Jason, they can't go back to the money printing machine. A recession, according to BlackRock, is foretold. So in other words, this is a done deal. They're not saying maybe.
Mm-hmm.
They're not saying, well, it could be. The chances are increasing. No, they're saying, listen, it's already a done deal. Central banks trying to tame inflation. It's the opposite of past recessions. Central banks, now we'll see if this is true or not. Central banks won't ride to the rescue when growth slows in this new regime, contrary to what all investors have come to expect, which is going to be, I think, a major, major hit to Wall Street here. And I think what happens is the Fed, I think this part is right. They're not going to ride to the rescue right away. And Jason, unfortunately, by the time they figure out they need to ride to the rescue, it's going to be too late.
Right. You know, all you really have to do is, and it's hard for some people, but you try to think like a BlackRock or try thinking like Vanguard. Okay. If BlackRock, who owns stakes in Vanguard and all these companies, almost every company in the entire planet, they pretty much own a piece of everything. If they're going, let's face it, if you own a lot of something, you want the value to go up. You're not going to go around the news saying, "Oh no, everything's going to crash." You want everything's going to be strong to build your asset price. However, they're in a position to buy when things are cheap. So if BlackRock says it's going down and Vanguard says it's going down, let's just pretend, and I'm just going to make up a bogus number. It was Facebook, $100 a share or something, right? If you're BlackRock and you're Vanguard, you own a bunch of Facebook, and you're going to say, you're out there, oh man, the world's going to burn, everything's going to be terrible, and you know it's going to happen anyways. The reason they're being honest about it is because, hey, if they own it at 100, maybe they'll sell 10% or 25% of their stake when the whole thing starts to crash. Then then the price goes down to 30, and then they just buy it all back. Plus all the other scared people that were watching the news. Well, oh my God, BlackRock, Vanguard, I better get rid of all my stuff. And then when it drops to 30, they buy it up, and the prices will come back at some point, right, Joe? At some point, I don't know about the tech stocks, the S&P. It could take a long time, but these guys are telling you that it's going down because, Joe, they're going to benefit. They want to own the whole planet.
I mean, they'll short it on the way down. They'll do all that stuff. I mean, listen, we've already had Morgan Stanley, Bank of America, Deutsche Bank, amongst others, saying that look for another 20% leg down in stocks in 2023. Now BlackRock piping up here. I think it can be worse than that. But hopefully, right, maybe kind of like this year, it got really ugly. We kind of bounced up, had a rally. We're giving some of that rally back. But we're going to hit new lows next year. I'm pretty certain of all of that. I think the question, Jason, really is going to be is how low, right? I would call 20%. I would consider that good. Really, in all of these things, because I just don't know how you stop job losses once they get started, and it just looks like the Fed is going to be hiking until that happens.
And I haven't brought this up in a while, but the markets are essentially frozen in place to where they were when Biden took office in January 2021. I keep talking about how the S&P, the Dow, they're all kind of sitting where they were. They go up, then it goes down, then it goes up a little bit, and the stock markets are crashing since 2021. They've been crashing. We just haven't lived through an inflative cycle since the 70s and 80s. So most people don't have a memory of all that inflation. And if everything is going up in daily prices, 10%, 20%, 30%, especially over 2021, 2022, and your stock does nothing, then you're losing money. It's already, so Joe, a lot of this might not be the most severe crash of all times, but it will be because the inflation takes so much more from you.
Yeah, and Blackstone, so we had BlackRock, Blackstone, the largest holder of U.S. houses. Remember last week we reported that they're limiting withdrawals out of their fund as investors are starting to flee this housing market. They were interviewed. The CEO was on CNBC and talking about, hey, don't be mad at us. We said from the beginning this product was had limitations on liquidity. He said, listen, we described it as a quote unquote, listen to this, Jason, semi-liquid fund. because we knew at some point there would be periods of volatility, and we didn't want to sell assets at the wrong time under pressure. And again, the fund down 13% and falling. And a lot of these investors, right, they get misled all the time thinking, oh yeah, it's Blackstone, it's safe. They're telling me it's liquid. Well, now they're out. Well, we didn't say liquid. We said semi-liquid.
Yeah. It just, the way that they change the narrative, the way they speak about things, Joe, that's why I'm so glad that this show is here, because you can guide people through this stuff. It's so easy to gloss over some of these things they say. If you look at the financial news, if you're not really paying attention, Joe, they could just pass it by you by saying stuff like semi-liquid, right? They could just pass it right by you, just kind of like they tried to pass by transitory on us, right? Transitory, right?
Transitory, right? Yeah. They trying to pass that one up for a long time. Patriot Radio News Hour. I got a great gold special coming up for you when we return from the break. Stay with us.
Wishing for a Christmas mortgage miracle? Patriot Trading Group wants to make your wish come true. Just enter to win on Family Values Radio website, and you could enjoy having your mortgage paid for a year. That's right. It's the Christmas Mortgage Miracle Contest. The winner will receive their mortgage or rent payments covered for a year. To enter, go to FamilyValuesRadio1010.com and click on the banner. Enter once each day to increase your chances to win, and look for bonus entry opportunities. That's FamilyValuesRadio1010.com. And enter the Christmas Mortgage Miracle Contest, sponsored by Patriot Trading Group. See our website for details.
800-951-0592, Joe and Jason, Patriot Radio News Hour. And again, I'm going to give out my son's number to you. Of course, Joey works at Northwestern Mutual. We have him on the show every week, and he has been telling you, begging you. Listen, 2022 was bad, but people were working. 2023 is going to be worse because it's going to be bad and people won't be working. You need to get your portfolio right. Call him, 602-909-9048. And as promised, I got a great special. First, I want to tell you, premiums have come in nicely here. And Jason and I will tell you, especially our customers at the lower end, they've been struggling. We've had a nice influx of selling. We haven't seen selling in really, Jason, probably almost a couple of years because everyone's been flush with cash, but we're starting to see some selling. Gold premiums have really come in nicely. What a great opportunity. And today, yesterday we did those 63 liberties, and what a fantastic opportunity that was. But today what we have are the AU, these what we call almost uncirculated $20, both the liberties and the safes. You get to choose which one you want. You can have some of each. You can say, give me all the libs, give me all saints, whatever you want. But here's the nice part. No premium at all. AU $20 saints, the same price as our regular circulated 20s at $2,075. And then Jason on silver, I got to get my sheet here. I apologize for the camera. I'm not used to having to look at the camera here. Silver.
No, don't worry about that.
Yeah, I know. I'm beautiful. Yeah. What can I say? Silver Eagles. The premiums have been outrageous. If you go online, and you guys know the online guys, there's nobody out there that will sell you a silver eagle. They want $42 plus. Now, somehow, if you buy, 1,500 or 3 cases, maybe you can get them to sell it to you for like $41, $40 and change. Not here at Patriot. Rolls of U.S. Silver Eagles right now, Jason, $780. And I went to public school, so I got to do math on my calculator. That's $39. We're like $3+ an ounce less than the guys that brag about being the cheapest guys. If you buy a case, which is 500 silver eagles. 19,000, that's $38. And again, Jason, now you're talking $3-4 an ounce less at 100-951-0592. So two great opportunities. AU20s, and here's what I love. You can have the Libs or the Saints. And we've got buyers that like both. A lot of people, I like the Saints because that was the new design, right? Teddy Roosevelt thought the Liberty coin wasn't majestic enough because the United States had become a superpower. So 1907, they commissioned Augustus St. Gaudens to design a new coin. Well, right before the coin came out, St. Gaudens dies. They named the coin after him. And it's really the design of all the coins today. It's the Walking Liberty on the Silver Eagle, the Walking Liberty on the Gold Eagle, all based on that Augustus St. Gaudens design. So a lot of people like that one. They think it looks prettier. But a lot of people like me, I'm like, older's better, right? The Saints, the Libs, 1866 to 1907, were the Saints, from 07 to gold confiscation in 33. But now you can get both, Jason. You can mix and match, throw some Silver Eagles in it. Great opportunity.
Yeah, with premiums down and gold continuing to go up, this is keeping the price kind of where it's been. Because, Joe, if the premiums were staying higher, then you'd probably be selling at, $21.50 on those gold pieces. So you got to, if you've been listening to the show, you got to understand the premiums have a lot to do with the price, Joe, not just the spot.
This is huge for gold. Huge reduction. Because really right now, 21.50 probably should be if where the premiums have been all year. I mean, we're benefiting because gold's made a $180 move in the last 5.5, 6 weeks. And these wholesalers, hey, we're seeing some selling, they're seeing some selling. Hey, take advantage of it. I don't think it's going to last very long at all. I think 2023, you're going to see a lot of big money moving in. I think we aren't done yet. I think we're going to see new record high premiums next year, especially think about Wall Street falling 20, 30, 40%. It could get really high. So take advantage of these pullbacks while they're available. You know who's taking advantage? Central banks. They've been gobbling up gold. Yesterday, after we got off the air, China confirmed that they are back in the gold markets. Now remember last quarter, central banks bought a record amount of gold in that 3-month quarter. 400 metric tons in a quarter. I mean, if you think about it, that would be, if they did that every quarter, they would essentially, Jason, be buying over half of all of the mine supply of a single year. I mean, it's an incredible amount of gold that they bought. The problem was we only had about, 80 metric tons where countries said, yeah, we bought 20. Turkey, we bought 30. We didn't know who bought the other 300 plus metric tons. China came out and said, well, yeah, I guess we bought some. They officially updated their gold holdings. But Jason, they only said, hey, we added another 32 metric tons to our gold holdings. So that leaves about 300 metric tons from last quarter still unaccounted for. But I got the feeling that China is slowly going to start increasing their gold holdings publicly as this whole currency situation. It's kind of interesting, isn't it? The Bank of International Settlements warned, we got a currency derivative problem. And then in the quarter before, we had record central bank gold purchases. You don't think that's a coincidence? We also got confirmation that November they added even more gold, Jason.
Yeah, I think there's a lot of gold being purchased and moved around to very important central banks and countries. Joe, there's lots of ways to measure gold's progress. One way is the average closing price for the year. So like a 365-day year, Joe, what's the average price of gold for each day for that whole year? It's gone up every year since 2015. even with gold seeming like it's down this year, it's well, I'll hit some of those numbers, but it's been going up every year, and it's getting ready to go up a lot in the coming year.
800-951-0592. Joe and Jason, we're coming right back. 800-951-0592. Patriot Radio News Hour, AU20s. Just another great opportunity here. Libs or Saints, you get to pick, mix and match. $2,075, and it's so funny because I'm thinking about like $100 in gold to go, and our circulated 20s were at least 21 and a quarter. I mean, it's just a huge opportunity. Don't wait. This is like, seriously, even at 16.20, this was about as low as we got here. Take this opportunity, and you get AUs almost uncirculated. These things are going to be so nice looking. Great. And then Silver Eagles. Jason, we're the cheapest in the country. $39 an ounce if you buy a roll, right? $780 for a roll. Buy a case, $38, $19,000 for a case of U.S. Silver Eagles. And I mean, and we're not just like 20 cents or 25, 30 cents cheaper. We're talking $2, $3, $4 less than everybody else, Jason.
That adds up really quick. And Joe, how many times have you heard me since I came on with you in 2018, talking about, because gold was kind of slow when I joined up, came into Colorado, and I said, hey, this is the time to buy, and the average closing price, for each year, I mean, it's gone up every year. So listen to these numbers: $11.58 for 2015, $12.51 for 2016. Now it doesn't go up a lot, but $12.60 in 2017, $12.68 2018. $13.93 in 2019.
Jason comes on board. $1,268 is the average gold price.
The daily price for the whole year. Yeah, not the year open, the year end, not the high. The average daily price for the entire year. So it goes to $13.93, Joe, and then in 2020 it goes to $17.73. Then in 2021, $17.98. This year it's at $18.01. So what I wanted to point out with these numbers is you got kind of like 11, 12, 12, 12, 13. I came in at 2018. It was in that 12 range, going into the 13 range, and I said all that time, I was like, this is the good old days. This is one of those levels where you buy it because in a very short time it's going to boost. Well, now that time has passed after 2019, because now the last 3 years, this year, last year, 2020, 1773, 1798, 1801. That's the level up we went. This is going to happen again. This is how I've sold gold to so many of the Colorado customers and the listeners here on on KXXT and 1010 in Arizona. Is this next boost is coming, and what's really encouraging is the average yearly price is average daily closing price has gone up every year since 2015. It's even if it's just a couple of dollars, Joe, it's still up. I'm surprised when I see the average closing price being up this year because gold has struggled, but it's still up, which means, Joe, why do I get the feeling that even though a lot of people don't buy as much gold in December, that I think the big players are loading up in December, and we're going to see gold prices boost, but I think very big, very soon.
Yeah, and again, as you pointed out, a couple of years, 2-3 years, little bit, bang, little bit, bang, and I think we're getting ready for bang again. So we went from the mid 1200s to 1300 to 1700, right? Then we're like higher 1700, lower 1800, right? Now the next leg up, right? Is it 2200, 2500? We do. I just want to point out central banks now, 13 straight years that they've been adding to their gold holdings. And it's not by accident this year, the largest amount on record. And again, I think it's directly correlated to what the Bank of International Settlements was saying about these currency derivatives markets. And Jason, I know you've actually gone out, because Jason, he listens to several other podcasters and things that to give some insight here. But from what you were saying, Jason, they think that a lot of these derivative trades, they're dead, they're busted, and it's just a matter of time before they have to show that they're busted.
Yeah, the guys that profess gloom and doom on the highest levels. You know, hey, the stock market down 80%, and the liquidity freezes tight, and banks are, you know, we have Lehman Brothers and Bear Stearns all happening. Like maybe 3 or 5 or 10 of those types of banks just go under. Those guys are saying, hey, by January, if this thing isn't fixed, there's legalities going on here. There's going to be some really back and forth infighting with the banks, not the central banks, but the big banks. That's one idea. But then the other idea, and Joe and I talked about this morning, is, well, you know, the central bank, they hold the key to the monetary system, and they may, while we're having this tightening going on, you know, and raising the rates to try to stop inflation, they might just start injecting money to save these dead derivatives. You know, it's a bailout or a bail-in, or however you want to call it, Joe. And this will not stop the inflation. If you look at the 1970s, early 80s, Joe, that inflation went up and down and up and down, and it was severe for almost the whole decade. And I find it interesting, of course, that it happened right after that we got taken off the gold standard in 1971. We're going into a new monetary system here very soon, and here comes that inflation, right?
Yeah. Yeah, and I'll keep my eye on that. That would mean the Fed window would have to open for banks to get dollars. Obviously, they did it for Credit Suisse. Remember, they opened that window.
Joe, let me jump in real quick. There is one thing that started out. I'm gonna keep watching this. The reverse repo market suddenly had a little bit of money starting to outflow out of there suddenly. So I don't know if it's going to be permanent, because every quarter it jumps up. So it might just be temporary. But if that reverse repo starts adding liquidity there, that could slow down the crash that's coming.
Yeah, so we'll keep our eye on all of those things. Ghana, an oil or a gold producing country. Their government came out yesterday and said that they are getting ready to unveil a new policy that they're going to buy oil with gold instead of U.S. dollars. Russia is hinting that they may do the exact same thing, that they're only going to accept gold and renminbi for their oil. If these things come to light, again, another reason, another sign that gold's getting ready to run. 800-951-0592. Final segment coming up. Final segment here on this Thursday, AU20s. Your choice, Libs or Saints. Super hot pricing, $2,075. The U.S. Silver Eagles, the cheapest I can find anywhere. Even the guys that I actually even checked a few places. These are companies I don't even really trust. We're cheaper than all of them. $780 on the roll. If you buy the case, save even more. $19,000 for the case. So that's $39 an ounce by the roll. $38 by the case, which puts us $3 to $4 cheaper than the major online guys. Take advantage. 800-951-0592. And Jason, we know digital's coming. Several countries are already, we know China's out there. Nigeria's another country. They have their central bank digital currency out there. It hasn't been widely accepted by the Nigerian public. Well, this may be another thing when we think about cash here in the U.S. I'm more and more coming around to the government won't ban it. They'll just make it impossible for you to use it anywhere, right? Walmart and Kroger and Costco and Apple, hey, we don't take that stuff. In Nigeria today, they are limiting ATM withdrawals. You only can withdraw $45 out of your ATM. They're limiting cash withdrawals from banks. You only can take $225 if you're an individual. And then listen to this, businesses. You're only allowed to take $1,125 if you go over that amount. There's going to be a fee of 5% on individuals and 10% on corporations. And Jason, I mean, you throw stuff like that out there, and all of a sudden, nobody's going to take cash.
That's right. That's exactly right. And so I can't tell you how many. I'm a cash guy, and I can't tell you just in the last year how many times cash is just being so much harder and harder and harder. I've noticed things, Joe, just like I actually do the self checkout at the grocery store, and I put my coins in. I want to make sure I get all my coins. I want to get every cent of my cash taken care of. And they're putting the coin dispensers on these self checkout machines. They always put it in a more and more hard place to put them in. They make it so that they only take so many coins at a time and then shuts off. The war against cash is on full blazed, and most people just agree with it. It's like, yeah, that stuff sucks, man. Who wants that?
I mean, I was in Vegas. It was shocking how many places just refuse. They don't at all. Sorry. If you don't have a card, you can't buy any food here. You know, you can't do that. And it's Vegas. You're inside of casinos. I mean, it's absolutely coming. You got to be ready for it. But it's going to come at a heavy price. And that's why we've encouraged, don't have excess money in those bank accounts, Jason. You're going to pay a heavy price for it.
You'll pay a heavy price for sure. So, this is a good day to buy gold, Joe. I'm telling you, this is that next stage of the good old days to buy it and at a level that's it's not, we've been around that $2,000 to $2,100 price for a while, Joe, and we've seen gold hit record highs in 2020 and 2021, but this is not going to hold in this price place very much longer, Joe.
800-951-0592. God bless everybody.